Bitcoin is winning no matter what because they are printing no matter what. 1 million US dollar debt per family, per household that is not owed to the government, but is owed by you directly. The system is designed to keep you locked in place. But there's also good news. This system is actually designed to fail. It's only a question of time till this whole construct will no longer work because it's built on trust, and trust is eroded away exponentially every single day. And the same reason why this system can't keep going is the same reason Bitcoin keeps on winning. It's just a matter of time. And I personally think this right here, Bitcoin at 58K, represents the biggest wealth creation buying opportunity that we have ever seen in the history of Bitcoin. The risk, the unanswered questions were never as low as of right now, and the opportunity, the reward has never been as big as it was right now. No matter if you look at the realized price, at the 200-week moving average, the power law, whatever you are liking to look at, everything tells you this is the time to buy. And this is what we are going to talk about with one of my good friends, Mike. Enjoy. I don't even know where to start because there's so many different interesting topics on Bitcoin currently. I think AI is a big one. Bitcoin treasury companies are bleeding massively, which also is always interesting to see. There's so many global conflicts going on. The Fed chair, I think, just like said that they don't cut any rates; they just leave it as is, which was fun because Trump brought him in, and I think Trump kind of wants to cut rates. What is kind of, from all of those things, the most interesting thing for you to start with? Like, what's the thing that caught most of your attention these days?
Yeah, that's interesting. The new Fed chair is interesting. Yeah, I would agree that Trump probably wanted him to cut rates right out of the gate. I think in some ways he made his own bed there, because had we been in an environment where, you hadn't had this Iran conflict that put a lot of inflationary pressure on the economy, he probably would have had room to make the argument to cut. But I think that, that supply strain on oil, which is kind of the main input to inflationary pressure, kind of put them in a box where he doesn't really have that flexibility to kind of cut right out of the gate. I don't know whether they might force it in 6 weeks at the next meeting. They may just go ahead and cut anyway, despite that fact. But I found the timing of all that really interesting too, as far as this kind of deal that isn't really a deal. It's more like another 60-day ceasefire. I don't know if maybe it's just a, fool me once, shame on you, fool me twice, shame on me kind of situation with the whole, hey, there's always a deal. There's all these montages of Trump basically teasing a deal. Pretty much it feels like every 3 days since March of like, oh, there's a deal coming. There's a deal coming. There's a deal coming. I think maybe the impetus for why the deal happened now, or at least kind of the ceasefire, 60-day ceasefire happened now, was the Strategic Petroleum Reserve of the United States is at its lowest point since like the 1980s. So I think we were able to weather the storm of like cutting off 20% of the world's oil through the Strait of Hormuz for a little while, for a few months, because of those reserves that everyone was sitting on. And that's just our reserve. I think in other parts of the world, the reserves are even worse. So I think maybe I'm just a skeptic, and I maybe come from the Orwellian school of thought of, the war isn't meant to be won. It's meant to be perpetual. So it's just kind of meant to grease the kickbacks and all the things through for all the politicians. So this may, in my opinion, we'll see how this plays out. But in my opinion, I think they may just be buying time. They may just be trying to let the world economy kind of like reprime the pump with oil to buy time, so we don't hit that kind of like really hard supply constrained wall and get that supply shock. So I think it's just like, hey, these reserves are getting pretty low. Let's put a pause on this. Let's try to get some barrels through there. Let's try to kind of reprime the lines so that we have a little more flexibility to kind of continue the conflict moving forward. Yeah, I mean, I'm hopeful because I'm kind of an anti-war person by nature. So I'm hopeful that the conflict will stop. But, if you fast forward 6 months and suddenly you see some boots on Karg Island, that wouldn't surprise me either. So, yeah, we'll see what happens with all that.
Yeah, it's super interesting to see. I mean, as a Bitcoiner, you always look at those things and you're like, it looks like it's good for Bitcoin. It looks like the conflict seems to be where they have to print more money in the future. Even if the conflict is kind of resolved, that probably puts a positive outlook on Bitcoin and like in the short run. So like no matter what really happens, in a weird way, it kind of benefits what Bitcoin will become at in the short run or in the long run.
Yeah, I mean, I think we're always maybe looking at these things through our kind of like orange colored glasses, but it does seem like that Bitcoin can't really lose. I think that's really true because I mean, it's obviously super inflationary, whether it's just the supply shock on oil for the entire world or just the fact that, all this military equipment that gets used, every missile that gets fired has to be replaced. So that's true. And then I thought it was really interesting, even though it didn't seem to be, um, maybe didn't really come to fruition in any kind of real terms, but the idea that Iran was using, a Bitcoin toll to put ships through the Strait of Hormuz, not the fact that there was a whole lot of transactions, but the fact that they put that out there, kind of signaling to the entire world that, hey, there is a money that cannot be censored, cannot be confiscated, cannot be stopped. And I think it was more interesting what the response was, because I think if maybe you would have tried to do that 5 years ago, maybe the world would have just kind of laughed at you. It was like, wait, you want Bitcoin? Okay, yeah, sure, give them Bitcoin. Like that, is that even worth anything? But it's almost like there's been this subconscious evolution of just kind of the zeitgeist psyche of just kind of understanding Bitcoin as money. Because when Iran said, hey, pay us in Bitcoin, nobody thought it was ridiculous. There's kind of been this kind of new revelation kind of collectively that it was like, oh, Bitcoin does have value, that Bitcoin is money, that is something that you would take in exchange for something valuable. So I thought, despite the fact that I'm not sure there was a single Bitcoin transaction as far as a toll was concerned, just the fact that they kind of put that out there into the mainstream narrative and nobody balked at it, nobody thought, hey, that's dumb, or Bitcoin's not valuable, or why would you want it? Because it's almost like we've kind of turned a new leaf on the narrative or on the arguments of, instead of people thinking Bitcoin's a Ponzi or it's going to zero, we kind of just have collectively, tacitly decided that Bitcoin is money. Bitcoin does have value.
Yeah, the fact that this was not news, which I never thought about it, is actually really interesting because it means people like, yeah, you said it completely right. If that would be the case 5, 6, 7 years ago, people would it would be in every newspaper. This would be like a huge kind of a thing. Like, oh, they use Bitcoin as a mean of exchange. They use Bitcoin as money. Like, why are they doing it? It's like whatever the headlines will be. Maybe it's similar to SpaceX, and they're having, I think, 18,000 Bitcoin on the balance sheet. It was all like, I've barely seen it. I think the only bigger personality that I've seen tweeting about it, and obviously he tweets about it, is Seyr. I didn't really see anyone talking about it or doing anything. It's like, yeah, of course, like the fifth biggest stock right now has 18,000 Bitcoin. And nobody seems to care. That's a huge, like, think about that news breaking in like 2019. that would be huge. Now it's like, yeah, who cares?
Yeah, that's true. I think maybe it's just a matter of like relative position size to the overall valuation, because the overall valuation of that SpaceX IPO is just insane. So, although 18,000 Bitcoin is a ton of Bitcoin, like compared to that entire, like, because they basically became one of the largest companies in the world overnight. I think I saw Elon Musk's net worth went up the entire life, like Warren Buffett. He made Warren Buffett's net worth in a single day. So it was like, just to show you how insane that IPO got and how large the valuation got. I think the biggest signal of them having it on the balance sheet was, it's kind of interesting to me that Bitcoiners have had this kind of weird relationship with Elon. Like, he's kind of the weird old hot girlfriend that you like can't stop thinking about, and you kind of want them to be a different way. But it's interesting to me that, I think in the beginning, when Tesla was accepting Bitcoin for its products, and then suddenly he was like, oh, hey, it just seemed very kind of like abrupt for him to be like, oh, we're not doing this anymore. It's not good for energy, whatever. And then it just kind of went away. And then, even though everyone came and was like, hey, look, Elon, like we can prove that, over 50% of Bitcoin mining is done with renewable energies. It is clean now. He never turned it back on, and he never really talked about it again, which I find to be interesting, that despite all of that, then you kind of see it's kind of the look at what I do, don't look at what I say kind of thing. Because the fact that they IPO'd and, the whole time SpaceX been accumulating Bitcoin on its balance sheet, that's kind of the what do I do, not what I say, because he doesn't have Dogecoin on the balance sheet. He isn't talking about, he didn't just dump all of the Bitcoin thinking it's failing. In some ways, I think, the kind of maybe triangulating conspiratorial mind of mine is, Tesla and SpaceX, they're very, very reliant on government subsidies and government contracts. So in some ways, although now he's the richest man in the world, and it seems like he can just tell everyone to go F themselves, which he did at that Davos interview or whatever, when he was talking to like Bob Iger. But in some ways, he kind of has to do what the government says, not only because he needs the subsidies, but all the verticals that he's playing in kind of need government permission. Like you can't really just be launching, rockets and satellites without government permission. And so I think he needs the subsidies, he needs the permission. So he's kind of doing what the government wants instead. But then in the backside, he's still accumulating Bitcoin, which tells me that he doesn't think it's bullshit. He doesn't think it's going away. He does have some kind of, thought that this is something that is going to be necessary in the future. And that is a valuable thing to hold on your balance sheet. He just doesn't talk about it. So it's almost like it may have come from, during the Biden era, it was, hey, we don't like Bitcoin. We're doing choke point 2.0. We're trying to kill this thing off. The banks don't like it. So don't talk about it or you're going to lose your subsidies. I don't think that's necessarily true in the current environment, but it may be, and this might just be wishful thinking or hopeful thinking, but it may be, hey, we need a little bit more time to work on our Bitcoin strategy. So go ahead and accumulate it on your balance sheet, but shut the hell up about it, because we don't have our ducks in a row yet. Like we don't have the reserve filled yet. We don't have the, the legislation passed through yet. So I found that kind of interesting. The other interesting thing about the SpaceX IPO and just like kind of the size of it, I don't know if this might also be conspiratorial thinking, but the fact that they kind of were changing like the index inclusion rules. So the S&P ended up not doing it, but NASDAQ and the Russell did. Because usually when you IPO, there's like a seasoning period of like 12 months before they let you be included in indexes. And they require you to have like a 4-quarter look back of like positive earnings, which SpaceX does not have. They're actually losing money. And then there's usually like a certain size that the float that you put to the private market has to be, because the IPO for SpaceX, the float they actually put out there for sale was pretty small. And that's why I think it was a supply squeeze where you had a small float, a lot of demand, and it really pushed that valuation to just crazy heights. The fact that it's like bigger than Amazon, which is like one of the most useful companies in the world, but it doesn't make a dime yet. And I'm not saying that SpaceX can't make a dime in the future. I think there's definitely some projected pathways that make SpaceX phenomenally profitable in the future. If they can figure out, like, they're shooting rockets and they're catching them. Like if they could shoot a rocket from LA and catch it in Tokyo and you could be there in 25 minutes, seems like that's going to be pretty profitable if they ever figure that out. Or if they can do this SpaceX build outs in space where energy is free and there's no cooling requirements because there's no atmosphere, that could be phenomenally profitable too. So it doesn't mean they don't have profit potential. It's just the idea that they're already bigger than Amazon when they're bleeding, what is it, like $9 billion a year? That seems a little bit crazy to me. And when they start to change the index inclusion rules, I start to think it was like, well, what would be the motivation for that? Why are they trying to do that? And the two things I kind of thought of or came up with was potentially the valuation is so rich that you need a ton of retail buyers for insiders to dump on. So they need a giant bag of like retail buyers to buy it so that the insiders can get out in size without crashing the stock themselves. And, because I think your average retail investor now is kind of busted. Like if you look at like credit card delinquencies are at an all-time high, auto loan delinquencies are at an all-time high, student loan delinquencies are at an all-time high. They just don't have a lot of extra money to be going out and, taking a flyer on the next shiny stock. But where their money does sit is in all the mutual funds, index funds, pension funds. So if you can kind of force the IPO into those things as soon as possible, it kind of unlocks an entire bag of retail money that's usually not accessible for just kind of like a trade on an open IPO. And then the other thought I had of it was, not only is the retail guy busted, but the government's busted too. And everything that, like, if you look at like SpaceX and Anthropic and all these mega cap IPOs coming down the pipe here, they're all in kind of what I'd say would be like critical national security infrastructure industries. So it's like the government needs this capex to be spent in order to not lose this AI space race, but they don't have any money because the government's bleeding $2 trillion a year. So they don't have $1 trillion to go give to SpaceX to do this capex build out. They don't have $1 trillion to go give to Anthropic to do this national security, AI build out. So where do they find the money? And it was like, hey, maybe they're just like, hey, push this into all of the retail index funds, pension funds, et cetera, so that we can get the capex money in to these companies that we deem to be critical to national security, because we don't have the money to give them. So do I either print $1 trillion, or do I just, if it's kind of like who is it? Dillinger back in the day, bank robber. They asked him, why does he rob banks? And he's like, because that's where the money is. So I think that might be the case here. It was like, hey, why are we forcing these mega cap IPOs into these indexes? Because that's where the money is. And we need that money to flow to these like critical national security industries.
We Bitcoiners always preach not your keys, not your coins, but we're giving away all our data to the big tech servers. Your passwords, your identity, your accounts. That's why I personally switched away and started using Proton Pass. Everything is end-to-end encrypted, so not Proton and not anyone else can read your data. And look how simple this is. I just click here once on the login button and I automatically get the passkey sign-in from Proton. With just one click on it, I'm signed in. And of course, it also stores all the two-factor authentication codes. And if my credentials ever show up in a data breach, it warns me so I can act very fast. If you care about holding your own Bitcoin, you should also care about holding the control of your own data. It's the same fight. And the best part is you're not sacrificing your convenience. It's privacy and security by default, and you can start for free right now. And if you want to upgrade to Proton Plus, you get that for just $1 for your first month. Link is in the description and in the pinned comment down below. So go to proton.me/pass/Robin Seyr. Make sure you close your digital front door. It takes you 5 minutes and €0 to start with. Again, that's proton.me/pass/Robin Seyr. Yeah, and also, I mean, there's also a very simple view. The same reason why, I mean, I don't want to say SpaceX is a shitcoin, but I hope the comparison still holds to a certain degree. Why are the crypto exchanges listing all those shitcoins? Because a lot of people will coming and buy them, and they make a lot of money just on the fees that they can get with each trade. They buy them a lot, they sell them a lot. And maybe NASDAQ just saw how much ridiculous demand is there for that stock. And they're like, we want to capture some upside. We're going to capture some trading fees there. And it's so much money that they can make if they include them. And so they're like, let's just do that and kind of abandon our rules and all of the reasons that you also mentioned. So I don't know, it's like the rules are stable as soon as a big enough fish comes in that says, hey, we need that one rule to change in order for me to get in. And they're like, okay, we want you. So I don't know. It could be very conspiracy oriented, or just very practical of like, oh, wow, we can make a lot of money with that.
Yeah, that's a good point. Everyone else has to stand in line, but as soon as a big enough fish comes, they just pull the velvet rope and they just escort them right inside. That seems to be what's going on. I picture like a Michael Saylor in that scenario where he's been doing everything in his power for the past year and a half to make every single change to his company to like get index inclusion. And then they just like, and then there's Elon just walks right by him in line, just gets escorted right into the club. It's got to be so frustrating when you're making all of the changes. And then they're like, oh, you guys don't make money? Oh, that's no problem. Yeah, come on in, man. Like, no big deal. Just like, because he's sitting here. And I think Saylor's catching a lot of heat recently just because, Bitcoiners like to eat their own. But like he's kind of making all these moves and everyone's freaking out about it. But like they're kind of missing big picture. Like his goal is, a better credit rating and index inclusion, because he thinks that unlocks a whole bunch of future demand that he can tap more money out of these fixed income markets. So he goes and sells 32 Bitcoin and then turns around and buys 1,500 and everyone's pissed off about it. And he's just like, all he was trying to do, I think, was show that the Bitcoin on his balance sheet is not impaired, because basically all these all these credit ratings were like, well, if you're not going to sell it, it's basically like you don't have it. Like it's basically a net zero on your balance sheet unless you're willing to capitalize on it. So he just sells like this tiny, tiny portion just to prove to the credit ratings that he's willing to do it. And everyone just starts losing their mind. And he's just like, I think Saylor's really, really smart. And like, just like every time he starts an interview, you can see him just kind of exhale. He's always just like, it's just like, I think he gets so frustrated that he just gets like blasted with these like super sophomoric like attacks, and he's just like and he's super patient about it, I think, because I think he probably could go off the handle a lot more than he does. But like he's like, hey, there's a plan here. I'm not an idiot. Just give me a little time. Like just trust the process a little bit.
I think so too. And I always see like nobody seems to remember that Seyr already sold Bitcoin in 2022. I think it was even 700 Bitcoin or something like that. I think people didn't realize it because it was in the same week. So like they sold 700 Bitcoin and then like 2 days later they rebought like 900, and it was literally just for tax harvesting things. So like they didn't notice it, because now how he did it now was like in 1 week they just sold the 32. And then in the next week, they rebought the 1,500, but then already the damage, which isn't really damage, but like the event already happened, and then he rebought, and people don't, they see a clip of saying, never sell your Bitcoin, and then they're like, the guy that is famous for that, actually the only guy, or like the most famous guy for saying never sell your Bitcoin, all of a sudden sold his Bitcoin. It's just a meme. So it's a fun time. But I didn't think that the market will react that harshly to it, because if you think about it, he has priming the market since months. See, he's saying that he will sell his Bitcoin. It's an option. It's all like, it's very clear that he's going to do that. Like he told everyone that he's gonna do that, and now he did it, and everyone is like, why did he do it? It's very clear.
Yeah. I mean, I also say don't sell your Bitcoin, but I also went to Steak and Shake the other day and bought a burger and a shake with Bitcoin. So like that essentially in my world is the same as Seyr selling 32 Bitcoin. It's like he goes and he buys a Diet Coke, and it's like that's the equivalent. That's how little Bitcoin he actually sold, given his like overall position. I just think it's interesting. I just like I feel for him, because I think he's trying to engineer something really, really interesting, and he just like constantly is getting attacked for it. And it's just like, I think all it is kind of trying to unlock like that $300 trillion fixed income market, and he's just trying to get the credit worthiness and get the index inclusion to the point that it's just an entire unlock to start basically starting the gravity flow of that fluid coming downstream, and then plugging into it to like siphon energy off of it. I think he's a really smart guy. I just think it's just like, we just attack him in just like a very ham-fisted way, which I think is just got to be super frustrating kind of on his end.
How do you actually think about his stock and the things that he's doing in general? Like it's pretty novel, and it's pretty interesting what he's trying to achieve. And it seems to me like that most Bitcoiners haven't understood it, and so he gets attacked from most Bitcoiners. And most of TradFi hasn't understood it, so he gets attacked from most TradFiers just for like doing some Bitcoin things. And there's a very few people that actually like see the things that he's trying to do and seeing like what he wants to achieve. How do you look at like what he's doing?
Yeah, I mean, I think it's really interesting. I think he's just, attacking $300 trillion of dead money. I mean, you figure anything that's in any kind of fixed income instrument, like maybe they're yielding 4.5%, and we know that the actual monetary debasement rate is 8 to 10%. So that it's all dead money. It's $300 trillion of dead money that should be looking for a new home. And if he's able to give them 11%, and even with that monetary debasement rate of about 8%, there's actually a real yield there. I think that's what he's trying to get the market to understand. It's novel just because I think it's predicate on Bitcoin basically CAGRing at 25 or 30% a year. So, but when he's making that argument in an environment like when you can't zoom out and you're like, what the hell is this guy talking about? What does he mean CAGRing 30% a year? It's down 65% this year or whatever it is. So he's making the argument that basically this thing CAGRs at 25 or 30% a year. I can give 11% of that to, some preferred stock investors, and then I could take the extra 20 or 15% and give that to my common stock. So that argument makes sense. And I think if we were in an environment where Bitcoin was CAGRing 30% this year, it would seem to make a lot more sense. I think he's kind of yelling into the wind, because he's basically claiming, and this, we know this as Bitcoiners because we're used to weathering the volatility, and we've learned to zoom the chart out and look at like the long-term trend. And if you look at the long-term trend of like the 200-week moving average, it is CAGRing at about 30% a year or whatever. But if you look at it in kind of 1 year, and this guy's saying like, hey, Bitcoin performs so phenomenally well that I can take the extra performance and I could give that to not only pay these preferreds off, but then I can give the extra to my common stock shareholder. It doesn't make it makes sense to us because you kind of look at the long-term math. But if you're just kind of looking at the short-term picture or the short-term window, it's like, what are you talking about? Like, you're paying 11%. This thing you're buying is just losing its ass. So like, it doesn't seem to make sense in like the short term, but I think long term, like, he'll be successful as long as Bitcoin is successful. Like, it's basically that simple in my eyes. It's like, if Bitcoin is to CAGR at more than 11%, he'll be able to pay those preferreds, and he'll be able to redirect the rest of that monetary energy to the company and to the common stock shareholder. But it's all predicate on if Bitcoin is successful or not. I think in some ways he might have even thought he would be able to pull the horizon forward, but I think they're trying to become kind of the manifest their own destiny, because like, they're buying so much Bitcoin and they're bringing in so much money through the stretch product. They're buying, billions of dollars at times, that I think they feel like they can pull that supply shock forward and then kind of become like drivers of their own destiny, to the point that if they could get us to that kind of marginal supply shock edge. And I know every time price goes up, you unlock more supply. We've seen that. But if you kind of get to that marginal place where most of the buyers are exhausted, or most of the sellers are exhausted, sorry, and they bring that kind of firepower to the market, you can see a future world where they're sitting on 860,000 Bitcoin. They go out and they spend, $5 billion to buy Bitcoin, to buy up the marginal float. And then because they do that, the price shoots up, and then what they're sitting on, kind of in like this kind of Scrooge McDuck kind of way, they got this giant pile of Bitcoin behind them. So if they can force the price up by buying up the marginal float, their balance sheet just explodes behind them. So I think they're trying to pull that event horizon forward, where even just being that large of a buyer, they can buy. They're already buying up all of the Bitcoin that's mined, all the organic mined Bitcoin they're buying up. And if they can get to the point that that the entire marginal float is exhausted, and that they just start actually pushing up the price with every buy, and then that pushes up their balance sheet in the background, that pushes up their credit worthiness, that makes them able to borrow more. That's the kind of inflexive, kind of flywheel that everyone kind of talks about. But you have to eat through the inventory and get to that kind of supply shock place where you kind of are kind of dictating price. Easier said than done. That's what like the Hunt brothers thought they were going to do with the silver market back in the day. And like, they couldn't really do it, even with buying up, I think 30 something percent of silver at the time. And, Saylor's somewhere, he's working on 5% of the Bitcoin market. So whether he has that kind of price control, but also we've never seen that kind of dynamic in a finitely scarce asset. So the math might actually squeeze pretty hard if he's able to get, and not only him, but if he has a few copycats like Strive, or, if any of these larger, say, what if SpaceX chooses to try to maintain, whatever 18,000 Bitcoin was on as relative to their overall balance sheet. what if they try to maintain that ratio with their new giant $2.2 trillion IPO, and they want to put billions of dollars into Bitcoin just to maintain that percentage? Not saying they're going to do that. Like, they may just leave it at 18,000, but you could see a world where, there's copycats and everyone kind of pushes into that supply float and starts pushing the price up. And then when you're sitting on that much Bitcoin in the background, your balance sheet just starts blowing out. And that probably makes, on some timeline, that probably makes Strategy the largest company in the world.
Do you think the future of the Bitcoin adoption story is now more institutional and more companies, as like the individuals kind of like already had 16 years to adopt it, and most people heard about it, and they're like, everyone that wanted it already has it?
Yes and no. I think you got to get to the point where people don't think about Bitcoin as like an investment or like a flyer investment. I mean, like kind of like I said before, like the retail investor is pretty much busted broke at this point. So like, it's like, hey, I can put something into Bitcoin. There's a couple things going on there. There was one, the kind of unit bias of Bitcoin. Like, I talked to a lot of Bitcoin newcomers, and they feel like even if they put what seems like a decent amount of money to them into Bitcoin, they're like, okay, great, I just bought 0.00000000006 Bitcoin. Like, what the hell is this going to do for me? It feels so insignificant to them. And they'd rather just go on to Polymarket or Kalshi and, bet on the weather in Los Angeles tomorrow and try to make a quick buck or something. So I think that's part of it. I think we need to get to the point that you don't think of it as an investment. You're not like putting it there and then like hoping it's going to 3x or 10x or 5x. It has to just get to the point that we have a kind of a collective understanding of, I go to work, I bust my ass, I get paid for that time, and I suddenly have this kind of macroeconomic understanding that I'm getting stolen from while I sleep by monetary dilution. And I think if we get to that point, you stop thinking about it as like a flyer investment. You stop comparing it to, hey, should I put money into the SpaceX IPO, or should I put money into, Amazon, or should I put money into Bitcoin? I think it just becomes your savings account because you understand that it's respecting you more than your normal money is. And then it doesn't really, then I think you can just have kind of this slow, consistent retail trickle where it's just, I go to work, anything I don't have to spend on groceries and rent, I put into Bitcoin instead, because that's where it gets respected and it's not going to get, debased away. I'm not giving it to a bank to rehypothecate it and give me 0% interest for that privilege, where they're keeping all of the gains and I'm getting nothing. And then, then heaven forbid I overdraw my account, then they charge me. It's like, it's just such a disrespectful relationship. So I think you can get to the point where retail just sees it as a savings account, and they'll spend dollars because they know they're getting debased. It's just kind of classic Gresham's law. They'll spend the dollars that are getting debased and aren't respecting them, and anything that they want to save, they'll put into Bitcoin because they know it can't get confiscated and it can't be diluted. So I think we'll kind of get there. But yeah, I think it's largely kind of institutional driven at this point. And I think part of that is just because, retail just doesn't have any money. Like, we've kind of been playing this transitory inflation game, and everyone's been building their lifestyle on credit, and we're kind of running out of rope. So that I just don't think retail has a lot of extra cash to be plowing into anything, whether it's Bitcoin or anything else. And I think that's kind of why they were floating the idea of like, hey, we need a whole bunch of capital to flow into these mega caps, but the investor doesn't have a lot of dry powder left. So where is his money sitting? It's sitting in his 401k. It's sitting in his mutual fund. It's sitting in the pension fund at his company. So how do we unlock that capital? Because that's really the only retail capital that's left to be deployed. But as far as like the companies getting involved in things, I don't think that's necessarily a bad thing. I think it's Bitcoin evolution. If Bitcoin wants to be money, it inevitably is going to be used by money brokers and financial managers and banks. And I think nation states is probably the next shoe to drop. But like, that's not a bad thing. That's just a sign that Bitcoin is succeeding.
Yeah, it's the whole game theory. I'm always surprised when people bring it up as a negative point towards Bitcoin, because I'm thinking, as long as I'm in Bitcoin, we always talk about companies are coming, nation states are coming, institutional money is coming, and then they arrive and everyone is like, oh, that's not good. Like how like if Bitcoin is successful, like I think that's not like, there's like almost like an impossible outcome. People want Bitcoin to be extremely successful and not be adopted by any company or institution. Like, you know what I mean? Like, it's almost like, how can you have both those outcomes to be true? It would actually be a red flag kind of for me if no company is buying Bitcoin, no institution is interested in. Like, imagine BlackRock is not interested in it. Imagine there would be 0 publicly traded companies that have Bitcoin on their balance sheet, opposed to now, I don't know, 200 or so. So it's like, do you really want to have an underground peer-to-peer kind of almost partly illegal thing going on? Because one thing that people underestimate is, if we don't have the Coinbases, the strategies, the BlackRocks of the world allocating capital and budget for people to go and talk to politicians every single day and advocate for better laws in Bitcoin and better protect the legal right to Bitcoin, it's a lot harder. Yes, I know Bitcoin doesn't care, but you as a citizen in this jurisdiction that you're in, you might care how the law looks at Bitcoin, because even though the politicians and the government and the executive cannot do anything directly to hurt Bitcoin in the long run, but they can hurt you. And so the political power of the money being in Bitcoin and the institutions being in Bitcoin shouldn't be underestimated, I guess, is my point.
Yeah, I agree with you. Yeah, I think it's kind of human psychology at play, honestly, at the end of the day. I think it's just like people really, really love a band when it's like a garage band, but then it gets really big and starts filling stadiums, and then suddenly people turn their backs on them and they're like, oh, these guys are sellouts, these are whatever. It's just like, I think that's really what's going on here. I think it's a human psychology at play where, like there was kind of a really cool culture and vibe to like early Bitcoin where it was kind of our thing. It was like kind of small and it was just us and it was like our little club and nobody else got it. And that it wasn't selling out stadiums yet. So it made it in a way, I think about this sometimes. This is a little sidetrack, but like people are always kind of clutching for identity. And a lot of times people gravitate toward things for identity that require very little effort from them. I would say putting on a band's t-shirt would be one of those things. Maybe joining a motorcycle gang where I said I just buy a motorcycle and then suddenly I'm in this club, but it doesn't really require a lot of like work from me. And like buying Bitcoin, now suddenly I'm in this little Bitcoin club and it didn't really require me to literally build anything or do anything. So I think it's a little bit of just psychology at play where you kind of long for the days where it was like a niche thing and it was kind of like it was your thing, or it was you and your buddy's thing. And as soon as it gets kind of big, people get a little turned off by it. But I also think it's maybe a holdover from our understanding of the old prior to Bitcoin world, where owning a lot of a thing gave you influence over that thing. I mean, Bitcoin's kind of the first thing where owning it does not give you power over it, which is very different to the traditional financial world. Because, if I go up and buy up a whole bunch of a stock, I basically can get a controlling stake of that stock. And then I control the board and I control all the decisions. I control where the company goes in the future. Bitcoin doesn't care. So like, I mean, Strategy with their 875,000 Bitcoin or whatever it is now, they have as much power over the Bitcoin network as you and I do. And I just think that's a new idea. So I think when you see these big money players getting involved, and it doesn't mean that like, obviously BlackRock can lobby Congress more than I can, but when it comes to the actual functioning of the Bitcoin network, they have no power over it. So I think that's a bit of a paradigm shift to kind of understand that ownership is not necessarily control. And then I think it's just the human psychology of, anytime anything gets, I mean, you see this everywhere in our lives. Anytime a sports team gets too good, the haters come out. Anytime Taylor Swift gets, courtside seats to the Knicks, the haters come out. Anytime anything that gets big ends up getting haters. And I think like the fact that Bitcoin starts to get haters is also a sign of its success. Bitcoin is Taylor Swift. It's becoming big enough that people are starting to notice, it's starting to threaten them, and then they're starting to hate it. So like, I think in some ways it's hard to get big without the haters coming out. So it's not necessarily a bad thing when people start yelling at the sky about said thing. So again, I just think Bitcoin is succeeding. It's inevitably going to work its way through those stacks. And just like you said, if they weren't getting involved, like if financial institutions refuse to get involved with Bitcoin, or banks refuse to get involved, or nation states refuse to get involved, you would have to kind of be like, well, what do they know that I don't know? Like what's going on here? And just like you said, like Bitcoin's not going to be very successful if it's just going to be underground railroad money. Like you want it to go mainstream so that like, and we saw this, I mean, you have the Robin podcast, but a lot of people are like unwilling to show their face because they're so scared about what happens. But if Bitcoin goes mainstream, you don't have to worry about that. Like we worry about this like $5 wrench attack or people coming at you like for money. But like, Tom Cruise walks into a coffee shop. Everyone knows that homie's got money and no one's just coming up and, smacking him in the face with a shovel. So in some ways, the more mainstream it becomes, like it becomes less kind of like dark and underworldy and scary. And you can actually be okay. You can be like an outward Bitcoiner, because I think about this sometimes because I think about Bitcoin as like an revolution, and it kind of needs a revolution kind of at some point kind of needs a face, like I think of like the early American revolutionaries, like if they were just meeting in a basement and none of them were ever willing to like put themselves out there, I don't know how much success they would have actually had. You need some people that are willing to put themselves out there, advocate for a better idea, fight for a better idea, and be willing to sacrifice for that idea. And I think of a classic Benjamin Franklin quote kind of right after the Declaration of Independence was signed. And he said, well, now we must hang together or we will surely hang apart. And I think it was just a great revolutionary quote of like, yeah, you need to just believe in an idea and be willing to sacrifice for it and bind together to make it happen. So that's a bit of a side tangent from where we started. But yeah, I think it's people don't need to get mad that Bitcoin is getting to those levels. Like that's a good thing. That should be celebrated. That means we're winning.
I also love that you brought up the wrench attack, because it's so interesting. If you really think from fundamental standpoints, Bitcoin is the best asset. Bitcoin is the asset that you can protect yourself the best way against wrench attacks. It's the only asset where you have amazing technology, extremely well-designed technology abilities to basically make it very hard to get your Bitcoin in an event like that, which is really interesting. Because if you think about it, every other asset, you kind of know how humans store it. If you have stocks, if you have bank accounts, if you have even gold, with Bitcoin, you don't fully know how someone stores it. You have it maybe on exchange, maybe you have it in self-custody. If you have it in self-custody, maybe it's a single sig, maybe it's a multi-sig. If you have it in multi-sig, maybe you have them all distributed in your city, maybe you have them distributed across Europe or across America, maybe you have it distributed one in each state, like whatever you're trying to do. Mm-hmm. Maybe you have a time lock on it, maybe you don't. So my point kind of is, it's so hard to know how someone actually stores his Bitcoin. So if someone comes up to like, give me your Bitcoin or I'll shoot you, I'm like, there are 100 different ways of like, yeah, you're gonna have to shoot me because there's like this in place, this in place, this in place. Yeah, we have to travel through that border. And there's a time lock of like 2 weeks here, and there's like a time lock of 2 months here. And yeah, we have to get to this guy, and we have to get in this bank treasurer. Like there's like 100 different ways you can protect yourself in this. I'm like, you can still shoot me, but it's a little bit of a process to get to my
Bitcoin. But then they're like, they hear you say that, they're like, whatever, nerd. They just start cutting your fingers off. Like I think it's a short period of time, because like we understand that, but the people that are performing these red attacks don't understand that. And like, like in law enforcement, they always say that you don't catch the smart ones. Like, it's the stupid ones. It's the ones that are like smashing a Bitcoin ATM with a hammer, thinking that Bitcoin will come out of it. Like, it's just like they don't understand the technology. So it's still a threat, I think, for the time being, because there's like an information knowledge arbitrage as to how Bitcoin works, why it's unconfiscatable. But yeah, to your point, I think on a longer timeline, as it becomes more well understood, they know that they cannot take it. And like, I think it actually disincentivizes violence. So, and this is true, like, from the individual level to the nation state level. Like the old world, the Mongols could roll in and they could, take all your, take all your daughters and take all your gold and take all your wheat and take everything. But, Bitcoin, since it's the first unconfiscatable asset when properly understood, it completely disincentivizes violence as an attack vector. Because I mean, just like you said, it was like, yeah, you can kill the guy, but you get nothing. Which before, you kill the guy, you take everything. You move into his palace, you move into his castle. So I think we'll get there, but I think it's just in the friction zone when it's not understood. People just think, hey, Bitcoiners are wealthy, I can get that somehow. I'll figure it out, like so. But I think the more mainstream it becomes, kind of protects against that, because, once, right now, there's a term Bitcoiner, which means, I guess, you got into Bitcoin and understood it earlier than everybody else. But in the world we're going to, I don't think that term exists. Like, like there's no dollarers. It's like, oh yeah, that guy's a dollarer. He holds dollars. Like that. It goes away. It just becomes money. It becomes ubiquitous. It's in everything. And then, there's no reason to target any single person anymore. So I think it's just a short moment in time where this is really a thing.
Yeah, I imagine Bitcoin getting kidnapped and educating and orange pilling on the way was like, yeah, like there's all those things. I'm like, oh, really? This works like that? Like,
but it's like that Ralph Wiggum meme from The Simpsons, where like you just talk about Bitcoin, and then they just they kidnapped you, and then they just bring you back home and like throw you back in your house because they don't want to hear you anymore. They don't want to hear you talk about Bitcoin anymore. Yeah.
Be so unhuman that like so much orange pilling that even kidnappers don't want to have you anymore. But yeah, let's talk about something more fun. You mentioned that before of AI accelerating deflation, and it's really interesting because right now we have the short-term thing where AI is kind of stealing the investment funder of Bitcoin, if there is something like an investment funder. But in the long run, I'm actually of the belief that AI will drive more demand towards Bitcoin. If you really think about what AI is actually doing to products and services and driving the deflation forward, how do you look at the AI impact on us in general, but also on Bitcoin?
Yeah, good question, Matt. I think the systems, at base level are just incompatible. I think is the problem we're about to find ourselves in. And this has always been somewhat the case, where it was kind of the great parlor trick, where if technology was driving productivity to like push prices down, say 5% a year, but I maintain 3% inflation, I have like an 8% delta where I'm not only printing away the productivity that should accrue to the people that technology is producing, the 5%, but then I'm also stealing another 3% to make sure that, the monetary supply is always inflating. I think that works as long as deflation is small and it's kind of incremental. I think the thing that AI does is it kind of brings exponential productivity gains to that world, which I think are not going to be able to be offset. So basically, base level idea, right? The debt system, our economy, our monetary system is currently designed, requires inflation. It requires debt expansion to stay alive. It's basically a pyramid scheme where a severely deflationary force becomes a huge threat to that, because it's just hypothetically speaking, if AI is able to show up and say, push productivity down to the prices will go down 30% in a year. But since we require monetary expansion because the system is already insolvent without it, then I have to print enough money to eat that 30% and another 5%. So I think something that's been kind of kind of small and seemingly inconsequential. I think it's kind of the reason they target 2% inflation in the first place. Is like they've kind of been like, hey, that's about the level we can steal from the populace without them really noticing or caring. But if you start blowing that out to 30%, 40%, I think it becomes completely incompatible. So like kind of the frog in the boiling pot, it's as if you just crank up the butane on it, because it's one thing to just be stolen from at 2% a year or 5% a year or something like that. But if we see these, I mean, just picture a hypothetical future where you have AI, you have robotics, and you're like, okay, hang on. So there used to be like people in like a sweatshop in China making my sneakers, and I paid X for them. Like whatever, I paid $100 for that pair of sneakers. Now I have a warehouse full of robots that work 24/7, 365 without the lights on. And now my sneakers cost $150. Like, in what world did how could they be possibly getting more expensive when that kind of technology is being leveraged? And I think it's just going to become so obvious to everyone that you're like, hang on, we're making these phenomenal technological improvements and all the prices continue to rise. It just doesn't make sense. Like, it doesn't make just pragmatic mathematical sense. So I think the systems are just fundamentally incompatible. The thing about Bitcoin being a finite, denominated asset, it can absorb all of the productivity gains. It can be deflationary right along with the actual true free market economy that's deflationary. So it reflects the economic reality. So it's actually the perfect money to kind of coexist in that economic reality where all of our productivity gains, whether it's AI or just us becoming more productive and humans becoming more in ingenuity getting better, all of that money or all of that productivity accrues to the money itself. It doesn't get siphoned off by money printing and like taken up the stack to the government or to large banks or these things. So it's a way that prosperity can be universally shared. So as the productivity of the human race gets better, the people that are actually performing the work benefit from that productivity. It doesn't get siphoned to the top. So I think AI is just accelerating. Like we talked a little bit offline. Like I said, the macro thesis, even without AI, was intact because the debt situation is completely insolvent. We have $2 trillion deficits, at least in the United States, every single year. We just got to the point that if you add up our debt, the $40 trillion of debt we have and all the unfunded liabilities of Social Security and Medicare, it comes out to more than $1 million per household in the US now, which is just completely untenable. Like the math is just out of bounds. Most houses do not have an extra million to be just sending to Uncle Sam to make that solvent. So, and I think AI just accelerates that problem. So the math was already bad. And then you add AI, which, potentially it can fuel productivity gains, but it also makes it's so deflationary as a force that it makes debt a liability. So when you have $40 trillion that the purchasing power of that currency deflation is trying to push up in real terms, it just becomes even more insolvent to actually service that debt. The real cost of servicing that debt goes up, and that's at the government level. But I also think even at the personal level, I've been I've kind of been looking around, like thinking about like purchasing a home, and like the idea of 30 years of debt, taking on 30 years of debt to buy an asset, I think was a really good idea for a while. And now it gives me pause because I'm like, well, how deflationary is this going to be? And it could end up being, maybe AI doesn't end up being nearly as revolutionary as people think. But I look at like your classic neighborhood, like say middle-class neighborhood in the suburbs of some kind. All of those houses, at least where I'm at, I'm in Colorado, they're pushing like $1 million now, just to like give it a round number. But I know that most of the people living in those homes did not walk in with $1 million cash and buy that home. They took out a 30-year mortgage, and that 30-year mortgage assumes that they have 30 years of stable income in front of them to pay off that loan. But then you start looking around the neighborhood and you're like, okay, well, who's paying? Who has these loans? Who has these homes? It's lawyers, it's financial managers, it's accountants, it's administrative professionals. It's all of these. If you were going to make a kind of a hit list of what this kind of new agentic knowledge, general intelligence AI is going to have on the chopping block, it's all of those jobs. It's none of them really have any kind of blue collar element to what they're doing. They're all just knowledge workers that AI is going to be really, really good at really, really quickly. So what happens to that neighborhood when, 30% of those people not only lose their job, but lose their job category? Like, it's not like they're just going to go get a job with the competitor. The job actually goes away. And it's not that, it can be doomerish because everyone's like, oh, we've had technological advances before. I think it's the speed of change here that might be the difference. Like, I think we're kind of whistling through the graveyard of, if you're a 40 something with kids in school and a couple car loans and a house mortgage, and then suddenly your job category just kind of disappears, what do you do? Like, it's kind of the classic, like, it used to be the old, you get fired, hey, go learn to code. Now the AI is doing the coding too. Like, you could become a vibe coder of some kind or whatever. But I think it's very threatening to a leverage-based system, because like before, when you could borrow at say 3% and you knew they were going to debase the crap out of that currency over the next 30 years, that was a good move. Like, I mean, you were basically shorting the dollar, and that's I think Lynn Alden talks about a mortgage as being like a giant short dollar position. But it changes a little bit when you have this new force that not only tries to put deflationary pressure on the economy, but also just threatens all of the actual mortgage holders. It actually threatens their well-being and their ability to service that loan. So, you can print money. And I think if you had kind of a '08 style undercutting of the housing market, they will do everything in their power to protect that. They might not necessarily protect the home borrower, the owner, but they'll protect the bank who holds the bad loan. Like, that's probably what they will do. They'll probably show up and try to print your way out of it. But at some point, if you print too much money, you push the valuations out of reach, where you could print money, but you can't print qualified borrowers. So if suddenly they try to paper it over and they push every house valuation completely out of bounds, and it's already at the most unaffordable it's ever been in history, but if they push that further out of bounds, my question is, who's the buyer? Like, who's supposed to come in and buy that? What was a $1 million house now is a $2.2 million house. You just get to the point that there's no buyers. Like, not only is the demographics bad because we put so much pressure on the economy that people have kind of stopped having kids because it's become unaffordable. So the demographics is shifting and shrinking. But then also you just get to the point that you take the demographics, you take the fact that, AI is probably going to take most of the low rungs of the ladder off, because like kind of the intern job or the paralegal job or the entry level job is the easiest one to automate away. So you take their, you take their income away and you put the valuation so far out of reach, there still has to be a buyer. And who's going to take out that loan? Who's going to be able to pay that valuation? Who's going to have the income to pay it? So I don't really know what happens. All I know is that's only a little anecdote to say AI being a severe deflationary force in a economic environment that requires inflation, it just seems problematic. It seems like we're going to be pulling on both sides of the rubber band, and at some point it has to snap. And it's just a matter, I don't know what the snap looks like. I try to do like intellectual exercises to think through, okay, well, what happens if we just continue doing this math and this wealth inequality just continues to blow out? What does it look like? And I think the only place you get to, as you have to K it out, eventually it gets so top heavy that you get revolution of some kind. And I think the way I think through that is that can be a violent revolution, like the French Revolution. The wealth inequality in the United States at present is actually worse than it was during the French Revolution. And they were like sending people to the guillotine. So they could be that ugly kind of like violent revolution. I think you can get a political revolution where, I think to no fault of their own, I don't think socialism is a good idea. I think it's failed everywhere it's ever been tried anywhere in the world. But I don't fault young people for looking at their current system and being like, I have nothing. I have no hope to get anything. That guy has everything. So you start gravitating toward political ideas that are redistributive and wealth destroying. But I don't think that like we see this happening in the US already, like a Mamdani in New York, or floating the idea of like an AOC in 28. And I don't necessarily think those are good choices, but it doesn't really matter what I think kind of personally, politically. I understand why those movements are gaining momentum, because the math is kaying out our economy so bad, we don't really have any other choice. So, and then I think the third rail, which obviously as a Bitcoiner, I think is the best place for us to go, is I think Bitcoin is that nonviolent revolution that actually allows the power to go back to the people. It allows the productivity to flow to the people. And I think that's the best choice. And it doesn't require any violence, and it doesn't require, propping up ideas that lead to poverty. So I think I'm hoping that's where we go. But I think all that to be said, I think AI is accelerating the inequality. I think it's going to come to a head, and we're just going to have to figure out what's next. And I hope Bitcoin is that thing, because it's the best of all of those choices. It's the best one moving forward.
With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups, because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use Simple Mining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. Do you think, because Elon also talks about that, do you think UBI is something that kind of bridges the gap and we kind of have to go into at some point?
I don't know. I mean, I think the short answer to that is I don't know. I don't think UBI is a great idea, but I don't also know what the alternative might be. I think the question the question I would have about UBI just right out of the gate is, where does the money come from? Like if you were floating the idea of UBI and we were running surpluses because, the government was run in such a phenomenally efficient fashion that we had all this extra money to be spreading around. But the fact that we are already, even during good times, are spending $2 trillion a year that we do not have, I would question kind of where it comes from. Obviously, the answer to that is they're going to print it. But if they just print it, doesn't that exacerbate all the problems we're already dealing with anyway? So like, yeah, you print like, and then if you're printing it, the value of printing money has to be found somewhere. It usually finds that value in whoever is, saving and working for that money. But if I'm going to pay you to sit at home and watch Netflix and eat, flaming hot Cheetos, who's going to be working for that money? Who's going to be saving that money? Where does the bucket of money that you find the value in come from? It just becomes like, I think at that point, it's almost like you tip the hand of like, yeah, this isn't worth anything. Like no one's going to work. It's kind of like the calculation people make as they approach retirement. They're like, hey, if I retire tomorrow or next year, I get 40% of my salary in pension. So that if you stick around, you're only working for 60% of your salary. Like you could get 40% for doing nothing. You're only working for the 60%. And at some point, it just doesn't seem worth it anymore. And I think I don't know how you would qualify for UBI, but if they're like, hey, we're going to pay your rent and we're going to pay for your food and we're going to pay for your TV and you can sit around. It was like, so me choosing to go to work, if all of that is already paid for, what am I really working for? Like maybe a little bit of a more luxurious lifestyle or something, but a lot of people I think will just throw up their hands and be like, yeah, screw it. I'll just do nothing too. So I know Elon has these like great ideas of just absolute abundance and no one has to work and I don't know what we do all day. We kind of figure it out, but maybe. But yeah, I think the point of UBI is looking at it. All I know is I think the transition from a monetary system that requires inflation and a free market that is going to dictate deflation, I just think the transition is messy. What exactly it looks like, I'm not sure. I think once we're on the other side and we have a monetary system that reflects the economic reality and all of our human productivity gains accrue to everyone that's working for that money, I think that's actually a really beautiful universe that like is like a far better place than where we are now. But it's kind of like throwing the brakes on a train. Like it's there's going to be friction, there's going to be sparks. It's not going to be a clean transition to try to reverse all the momentum we have going in one direction. So yeah, I think maybe kind of buckle up. I don't have any like real idea of what that looks like, but yeah, I think when you have an insolvent system, it's kind of like a unstoppable force, immovable object kind of feeling in my brain, where I'm like, this is severely deflationary, you can't stop it, you need the inflation, you have to try to offset it, but the harder you try to offset it, the worse all of these problems get, until you just get to the point that it just cannot tolerate any more money printing. So yeah, I don't know, like it's every 100-year period usually has a generation of people in it that faceplant in some form or fashion. We've had it pretty good. So maybe it's around the corner for us. Maybe we'll have some really, really brilliant leaders that are able to navigate these waters. I don't have a lot of hope for that, given just the track record of the leaders I've seen in my lifetime. So we'll see. But I think all that, like, since Bitcoin seems to be the money that reflects the economic reality of where we're going, kind of the Wayne Gretzky skate to where the puck is going, I think the sooner you see that and the sooner you hedge against that inevitable transition, the better off you will be. But what it looks like in the middle, whether it be UBI or, whether they just start, because, if these AI companies or the Mag 7 just start making all the money, like even now, like of the S&P 500, it's like 7 companies make money and the rest of them lose money. So kind of like the Dillinger quote from before, like, what are politicians going to do? They're going to go to where the money is. So like, do they just start, do they tax these companies at 50, 60%? I don't know. Do they nationalize them? Do they do, who knows what they're going to do? But I think just like, I don't know if you saw in Illinois, they just passed like a crypto tax of like anytime there's like a crypto transaction, there's a 0.2% tax on it. And this would include, even if I just took, say I had my crypto or a digital asset of any kind, it's just a blanket digital asset law. But if I have a digital asset, say I have Bitcoin on Coinbase and I just want to put it into my self-storage, that'll get taxed at 0.2%. And then if I move it again, it'll get taxed 2.2%. Basically, anytime it moves, it gets taxed. So I think what we're going to see is the budget positions of national governments, state governments, they're already bad. They're already trying to kind of nickel and dime everything. That's only going to get worse. So property taxes go up, transaction taxes go up, all of these things. It's just going to continue to happen. So yeah, I don't know. They're coming for the money because they need it and they don't have it. And I think I would say get some money that can't be confiscated, because they're going to come for it.
Taxing a Bitcoin transaction, even if it's not a sale, even if it's a sale, I personally think it's a stupid idea, but taxing an internal Bitcoin transaction, just moving into a wallet, like that seems to be quite I don't even know how to get to that idea. Like usually, like I have, like even with UBI, I can see the positive side, I am not a fan of the idea. Like I'm not a fan of like increasing the state dependency from individual people. But even there, I can kind of see why people think about that idea, especially with AI. I can see the kind of the positive side of that, even though I agree with the negative side of it. But with a tax on a transaction, just moving Bitcoin around, I don't even know how to get to like that. Like there has to be some, either you just don't understand how Bitcoin works. Like think about the same law on cash. Like, do I have to pay transactions if I buy myself a new wallet? Like,
Yeah.
like it's just like moving it from the right hand. Like all of a sudden I have to pay. Like it's just like I don't even want to entertain that thought of like what it means for that law to be active. Is that already passed? Like, is that just a proposal, or is that actually like active?
I think it already passed. It already passed in the state of Illinois. It just passed, so I'm not super well versed in it, but yeah, it's kind of like I've heard people equate it to like if I pay sales tax at like a restaurant to take a burger, and like I buy a burger and fries, and I pay sales tax to buy the burger, but then I want to take it home, then they would tax me just for taking it out of the restaurant. They'd like tax me because I walked out the door, and then they tax me, whatever. Like they tax me because I put my leftovers in the fridge, and then they tax me when I pulled it back out of the fridge. I think it's just a canary in the coal mine of kind of where we're kind of going. It's just like I mean, hopefully it's a horrible idea. Hopefully everyone leaves Illinois. Hopefully like everyone kind of, it's the jurisdictionlessness of Bitcoin helps in that regard, where it will flow where it's treated best. But it does show you, as our hope is that they remove capital gains so that it could be a peer-to-peer money. That it seems to be a step in the opposite direction of that. It's not to say that everyone will follow their lead, but it's just something to be aware of. I think in some ways it's a bit of a a signal flare for like, hey, self-custody does matter, because you can see a world where any third party holding any kind of digital asset, they're going to control those off ramps, and they're not going to let you get your hands on it unless you kind of pay the toll. So, self custody is the way. I think the way I also think about that is like it's frictionless or easy now for anyone to go into their brokerage account and just buy Bitcoin exposure through iBit or through Fidelity or through ARC or whoever they're using. But we also have to remember that Satoshi's vision was a peer-to-peer network. The infrastructure is still being built out. There is going to be utility here to be used in the modern world. And I think self-custody Bitcoin in that world is going to catch a premium because it's actually going to be useful. Like you can have exposure through iBit, and you can kind of ride the store value monetization phase, which I think is important. But at some point in the future, you're going to want to use it. And if we do get to a point if Illinois is an indication that they're going to start controlling the on and off ramps, you're probably better off just to have it in self-custody already, where you can use the kind of decentralized infrastructure that's getting built out by, all the phenomenal minds at Bitcoin that are working on these problems, instead of having it in there. Because you can picture a world where if that's the posture of budgets are blowing out, we don't have the money, where's the money? I have to go get the money. If we're right, and there is, kind of a growing demand into a finite supply squeeze of Bitcoin at some point, and, suddenly Bitcoin does run in price, and like most Bitcoin wealth, like does accrue to people that are holding the coin, you can definitely see a world that indicates that we're heading to where they're going to target you, at least from a taxation standpoint. Like the fact that Elon suddenly becomes a trillionaire, nobody's applauding the fact that he made about 4,500 millionaires. They just think, hey, trillionaires, too much money. Give me that money. Like that's how your average kind of person reacts to that kind of wealth accumulation. So I would say if you're in Bitcoin early, you believe it has the upside that we believe it has. We do think it's going to move. Taking those precautionary steps before they start controlling the on and off ramps. And hopefully that doesn't come to fruition. Hopefully they actually say, hey, no capital gains. We want this to circulate as money. But just as a hedge against that potential future, figuring out the self-custody step now, even though it kind of seems like a little too difficult, or you don't really care now, it might position you to weather what's potentially coming in those jurisdictions that'll be a little less gentle to accumulated wealth in the future.
Yeah, it's pretty simple. Like if you hold Bitcoin, there's two use cases. Like there's two main pillars that you get from holding Bitcoin. The first one is the wealth, the number graph technology, You get wealthy over time. You get that no matter how you hold Bitcoin. Most likely, like there's this thing of like, will the state take it away? Like all that. But like, let's just say all the normal rules of society stay in place. You get it with IBIT, you get it on exchange, you get it in self-custody. But the second aspect is I call it the freedom technology, the freedom side of Bitcoin, so that you can control it yourself. You run your own node, you do all the work yourself, and you actually do those things. It comes with one downside, that you actually have to take care of that. You have to be a responsible human being and research that, or like find a partner that helps you with that. So it's like, it comes with extra work and a little bit of extra effort, but you're getting a second use case, a second pillar of like how to deal with Bitcoin, because all of a sudden you can actually transact yourself and nobody can really take it away from you. So self-custody is very unpopular if you really think about it. Like it's popular in the smaller Bitcoin ecosystem, but it's very unpopular in the terms of nobody's doing it. And this is actually an argument for self-custody, because if nobody's doing that, your self-custody Bitcoin became even more valuable, because you are more rare in that instance. I don't know if that's clear for people. It's like, if only a few people use something very powerful, the small powerful thing becomes even more powerful. So let's say you are in a small village with like 100 people. If everyone has a gun, the gun is powerful, but not as powerful if you're the only guy with a gun. Because all of a sudden you become a lot more powerful with what you can do with that. And I look a little bit the same way on Bitcoin self-custody. I love it and I do it, and it's very important that people do it. But actually, if less people do it, in a weird way, it gives you a lot of powers to have that, even though I still recommend everyone to do it, to decrease my power. And maybe also there's this political aspect, but I think we reached escape velocity, where if not a lot of people do it, at some point it's just like legally it's like people are like, oh, don't do that. Like they kind of like have weird laws around self-custody. And if more people do self-custody, it's more well protected to do it. And like the ecosystem is better on it. But I think we reached escape velocity, where Bitcoin in self-custody won't be something illegal to do. And even if, like, who cares?
Let's hope so.
It's still freedom for you, but I feel like we reached escape velocity on that point.
Yeah, I mean, I think the Illinois example is kind of similar to what you might see at like the nation state level. I mean, it's, if I have self-custody Bitcoin and they do something like that in Illinois, I just drive out of Illinois. Like there's nothing they can do to, exert their 0.2% tax. I mean, I guess they could try to stop you at the state border and be like, hey, do you have Bitcoin? You're like, no, I lost it. So like, there's no way to, like, if it's self-custody, they can't do anything about it. They don't have any control of any of the rails. But just like if I was a citizen of Illinois and then I wanted to move, even if it was because of that law, you can envision a future where, just like when I'm trying to do sports betting and it's like, hey, that's not available in your state, you could be like, hey, I want to move my Bitcoin off this exchange. And they're like, oh, well, this account was KYC'd in Illinois, so if you can move it, but you're going to have to pay the 0.2% tax. You don't actually have control of the money. So it kind of is a microcosm example of like what somebody like a refugee fleeing like in Ukraine or in Iran, or trying to take their net worth with them. It's kind of a microcosm of that, where you just have full optionality if you self-custody it. Like no one else has an opinion as to where you move that capital. Whereas it's just like you said, it was like, hopefully we're in a world where everything, all the societal contracts, stay intact. But I mean, if that's an indication of kind of like the, when the income tax started here in 1913, it was like, oh, don't worry, it's only going to be like a 1% tax on the top 1% of, wage earners or whatever. And this is probably similar. It's probably a 0.2% tax on all transactions. They're like, oh, well, The budget got a little worse. Let's make it 0.5%. Oh, it's going to be 2%. Oh, it's going to be 3%. It's going to be 5%. Like they just keep ratcheting it up. That's how we got into this mess in the first place. I routinely think as an American here, I'm like, man, they put a 3% tax on tea and we threw it all into the harbor. Now they tax 40% of everything we make and do, and everyone's just scrolling TikTok or like don't even care. It's like, it's just like it's a slippery slope once you kind of just allow yourself to be in that position where their budgets get worse. It's like they will push the abuse as far as they can. It's like the book The Sovereign Individual. It's like they treat us like cattle in the field just waiting to be milked. I think that's kind of what is going on here. And it's just like that's an indication that I feel like in some ways as Bitcoin people, once kind of the administration flipped over and Trump came in and he's floated the idea of a strategic Bitcoin reserve, it kind of felt like we had weathered the storm of kind of the attack vectors coming after the financial rails. But, there's no guarantee. We haven't passed any legislation. We haven't changed anything. So, as soon as he's gone in 2028, it could completely reverse again. And they could come after Bitcoin just as hard as they were coming, if not harder, that they were before. So it's no secret that like an Elizabeth Warren does not like Bitcoin. She does not like, they kind of want a central bank digital currency of sorts. So we could move back in that direction. And in that world, self-custody becomes much more important. So we probably just shouldn't become complacent just because like, the sun is maybe shining in our direction right now. That doesn't mean that's going to be the case in the future. So
I have one more question on the AI thing. What do you think, because I think about that a lot, what do you think is the most valuable thing or skill or whatever you can do in an AI world? Like if we think about that AI is also coding now, is all doing all those things, I still think people will do some kind of work to like create value. What do you think is that thing that we're doing, the skill that is still a valuable thing, even if AI and robotics are way more advanced than it is right now?
Yeah, good question, man. I mean, I think like the first bite of that apple is going to be, I think it comes for kind of the knowledge jobs first, like any kind of like anything you can do on a computer keyboard, I think is like probably in the crosshairs first. Then we probably get into the robotics world where even like kind of the more blue collar jobs, work with your hands type jobs probably come under threat as well. The way I think about it is it's going to be a leverage tool. And what I mean by that is I think imagine an accounting department of 10 people is going to be an accounting department of one guy with a powerful tool that can do 9 people's jobs. So, and I think, a production department that's shooting commercials that used to be 100 people is now going to be 3 people leveraging these tools to do the work of that old 100 people. You know, a floor of 15 lawyers is going to be 1 or 2 lawyers leveraging these tools to do the work of all the other ones. So, I don't know if it's like a particular skill that is necessarily the most valuable. I just think that it's going to be that much more important to kind of be in the top 10% of whatever knowledge field that you work in, because it's almost like, yeah, every single community college has a economics professor, but what if everyone could take economics from the top economic minds in the world? Like when they leverage technology, suddenly everyone can learn physics from Michio Kaku or something like that. So I think it's going to be a leverage tool where it's just going to be that much more critical to be in the top echelon of people, which is scary because, there's a lot of people that even if they're honest with themselves, they do a job that's really just not that interesting and, not that novel. It's kind of just, moving things from one box to another box or, updating a spreadsheet or doing whatever it is. And that's not to like take away from what people have chosen to do as a living. I think about this more as kind of advice to like the next generation of people coming up. Is just like, man, this is not like life already wasn't easy. And now you basically have to make sure you're in the top 10, 15% of subject matter experts in your field, just because I think those people are going to have so many tools at their disposal. They're going to be able to just do more work. So, yeah, I don't know if it's a particular skill set. I just think you have to push yourself into the upper echelon because most of just like kind of I think Seyr put it interesting in a way that stuck with me. He said we're decapitalizing human labor. So like we're basically demonetizing human labor through these tools. But I don't think we will maybe get there to the point that they become like, advanced general AGI intelligence. But I think for a while it's going to be subject matter experts steering the ship with like very powerful tools using less human capital to accomplish everything. So hopefully that just means we spread out the breadth and everybody becomes, everyone starts using these tools and we all just like 10x our production. I just think in the short term, it's more likely that 20%, like kind of the Pareto principle, 20% of the people do 80% of the work, and the other 80% of people are just kind of rudderless, just kind of left out to kind of flounder, and they can't really figure it out. So yeah, again, if that's UBI or something else, we'll see what that looks like. Because we can, I feel like, I don't know how you feel about this, but I think about it sometimes. We could enter some, just like I kind of said before, like with a house, there has to be a buyer. Like we might be phenomenally productive with robots, but like who's going to buy the stuff? Like you kind of have to have this kind of copacetic economy where people are making an income and then they go buy the things they need, and then that gives someone else an income to go buy the things that they need. But if we just become really phenomenally good at making stuff, who buys the stuff? Like if robots aren't earning an income, it's like, so you don't have the kind of butcher baker candlestick maker kind of relationship in an economy where it's kind of everyone is kind of greasing everyone's skids. If it's just a robot making the stuff that doesn't make an income and doesn't consume anything but electricity, who's the buyer? So like I think it's gonna challenge our economic models in a way that I guess this is just the story of human progress and evolutionary, technological evolution. We're gonna figure it out. I think in the long term we're gonna be okay, but that doesn't mean that you're gonna be okay. I remember I had a conversation with my sister recently, and I was kind of like, I'm always kind of bringing up this crap and whatever. She was just like, basically made the point of like, hey, this has always been the case. We've always been okay. We've always figured it out. And I do think that's true in aggregate. I think that's true for the collective. The collective, will figure this out. But if you're a if you're a lawyer and you have a $900,000 mortgage and you have 2 kids in private school and you're driving around a couple like nice cars that you got, paper coupons on, you might not be okay. Like the collective will be fine. You might not be okay at all. Like, you might be in a debt laden position that if you get your income cut out from under you, you're actually in really, really big trouble. So that's the way I would think about it is, I don't know if there's like a particular skill set you can kind of go into. Cause like you would think that it was like, hey, coding, or hey, building data centers, or hey, whatever. But I mean, who's to say these guys aren't going to start coding themselves? Who's to say they're not going to start building their own data centers? I think that's Elon's goal, is to make robotics so he can go build data centers in outer space or on Mars or on the moon or whatever. So, yeah, I think it's just I think maybe the answer is just, we're not sure what that future looks like. So stay curious, because you're going to have to be more nimble than we've probably ever had to be before. Like the idea that you work down at the factory for 30 years and get the gold watch, that's probably not realistic. Just like I said, the ideas that these mortgages are predicated on 30 years of stable income, that's probably not realistic. I mean, that's probably, I don't know. The top of my head, I can't even think of a job that I would say from today, I would guarantee would still be around in 30 years. Like in a AI accelerating technological change economy, I'm not sure there is that job that you could say, oh yeah, that'll still be around. I mean, I don't know what it would be like. So I think we're just going to have to be nimble.
I have a thesis I want to ask you, like, what's your opinion on it? Because I think a lot about AI, and AI will make us extremely productive and will bring a lot of better products, better services that take less energy of humans to us. So what it will do, it will probably drive down the amount of hours that the average person will work. If that's true, and I think we already seen that in the last 10, 15 years, I think the average hours that a person works is slowly declining. And so I think this will just keep on going, especially with AI, depending on like how fast it also goes. And then like what are people are going to do? And so I think we have a whole new ecosystem on people getting entertained. Because people will do stuff. They'll, I don't know, join some health clubs. They are going to figure out some new hobbies. They are gonna watch Netflix. They're gonna play video games. They are gonna play sports. So like there will be like a World Cup that we now have in America. I think such events might actually be a lot more, and there will be a lot more niche sports that people will play because they need to be entertained. And what better way to be entertained than like with something fun? You actually kind of want to play. Like I could play beach volleyball every day. Like I have no problems with that whatsoever. It's a lot of fun. Not for my feet because I'm tall and the sand, and I always mess up my ankles. But also video games, the same concept. There's already like online tournaments that have real prize money in them. Think about what if on average every human gets 50% more of their time back. The online video games tournaments, it'll just explode. Then it's like, what else? Okay, people will watch stuff because they're gonna eat, and while eating they might watch something, or they come together and they do something. Yeah, will AI does all the stand-up comedy, all the podcasts, maybe even the movies and all of that things? Maybe, I don't know, because like humans have a weird connection with other humans, because you could already do everything with AI right now and Google your way through it and Claude your way through it. But people still like to listen to like a human being explaining a topic for like 15 minutes. And people are kind of like allergic against like AI slop. But what if that AI slop is indistinguishable from actual human content? So
that's the key.
yeah. So it's like, I think the overall entertainment sector might actually like find a lot of explosion if AI actually brings that abundance that we hope or that we want. Then like, okay, what is the thing that makes it value? Like, what can you as a human do to make money out of like this whole new entertainment thing going on? I don't know. That's kind of like figuring that out will take a long time. But I have this suspicion that like all those entertainment things probably get more popular than less popular.
Yeah, I think that's fair. I think real experiences will probably catch a premium. I don't know if that really makes those industries larger. I kind of think we're probably on the precipice of an AI Taylor Swift that, becomes huge. I don't know if you mess with like Suno at all, or like you can just put in little prompts and make songs, and they're actually like, it's in the very first inning and they're actually pretty good. And you can see how they could just become hits. Like, cause I mean, people like Post Malone figure this out. Like it's very formulaic as to like what kind of melodies like humans kind of gravitate toward. And I think the AI is probably going to get very good at pattern recognition and be like, oh, hey, here's the 10 biggest artists of the past 10 years. What did they do? And they just run analytics and they'll just be able to bang out a song in 5 seconds. And I think like, have you ever been to the Sphere in Las Vegas? I don't know. I remember I saw you in Las Vegas. I remember at the convention, but the Sphere, like
I haven't been to the Sphere, but it looks, I only saw it from a hotel room from outside. I haven't been inside yet.
Okay, yeah. So if you're in there, the visuals are incredible. There is an artist down there. He's like a tiny guy on a tiny stage, but when you're in there, you almost forget that the actual artist is there because it's just such a visual stimulating environment to be in. So I could picture a world where like, there are AI artists that people love that they don't really care that they aren't real. I know everyone like kind of craves authenticity, but I can totally see a concert in the future that the AI person is not real. It's all visually driven. It's just as entertaining. The price level's way, way, way down. So I can't get a $2,000 ticket to Taylor Swift, but I can, get a $20 ticket to, AI Swift and be completely happy. Take all my kids, don't have to bankrupt myself, don't have to take out another mortgage on a car. Or like, instead of getting courtside seats to the Knicks, is there going to be some kind of courtside camera that is basically like a bumblebee lens that gives you the entire VR experience as if you're sitting there, but at the fraction of the price? I mean, I think a lot of these things are kind of possible. I think the key to that kind of abundant future is kind of where we started with making sure the money matches, because the only way you can work less and less and less is if the money you're earning and saving goes further and further and further. And the way we have it engineered now, most people are just on a hamster wheel, probably a few hamster wheels. They work a job and then they go do Uber, and then they're trying to do kind of a side hustle thing. So I think if we can get to the point that the money matches the reality of that ingenuity, deflationary AI economy, then I think you're right. I think we can work less and less and less. And that kind of helps with the kind of Pareto principle of doing work. Because like then instead of like maybe one guy doing the job of 10 other people and 9 people being unemployed, maybe one guy can work 2 days a week and another guy can work the other 2 days a week, and everyone gets a little bit of time back, but everyone is still participating in the economy, and everyone kind of shares the wealth and shares the prosperity around. And all of our, prosperity gains accrue to all the people that are working and all the people that are saving in the currency. So it's kind of the way our system now mathematically distributes money from the bottom to the top. In kind of a Bitcoin world where all the times we're making more things and becoming more productive, all of those things are denominated in a fixed supply asset. All of that productivity accrues to anybody working for and holding that money. So it kind of reverses the math and makes that kind of world possible, where now it feels like all of your goals are just running away from you and you cannot catch up to them. I think in the Bitcoin world, at least, theoretically, all of your goals would come towards you. You would be able to work less hours. You'd be able to afford things, like that house. Instead of running away from you, the price would come towards you. So it kind of reverses the math and makes a prosperous world possible, but it's a matter of getting there. But yeah, I would agree. Once we're there and, you can actually wire the economy so people can do less and have more leisure time, then yeah, they're probably, if today's any indication, we'll probably just do more of the things we already do with our leisure time, because we've already proven that we enjoy them, right? So whether that be vacationing or whether that be watching the NBA finals or the NFL or going to concerts or whatever, like, yeah, those things that fill our leisure time will probably become more abundant. It's just a matter, I think, of how disruptive is this technology to those things too. And I think it may just get to the point that most people can't really afford the authentic experience, but they have to, buy some kind of Temu version of it. They can't go to Italy, but they can put on VR goggles and walk around Italy in their living room. Like, it might just get to that point where it becomes a premium. But hopefully, if we reverse the math and everyone becomes more prosperous, that's the unlock, where you don't have to go to the Eiffel Tower in Las Vegas. You can go to the Eiffel Tower in France. Like that's the preferable outcome.
You made me think about a thing, because now, like, the phone is such a big part of our lives right now, and there are now those, like, how they call it in English, but like those camps that you can go to, where there's like a whole area where you can relax and kind of get your mind off, and there's like no phone allowed, and there's human interactions. You just like have books and all of that, like kind of retreats that get you away from digital life. And they're asking for massive prices, by the way. They are a huge premium. I'm like, oh, like, you're just like is having a no phone and no digital life thing, and just like charge a tremendous amounts per night, per day. And I was thinking, like, why people do that. It's like, because they miss that interaction. They miss that like human kind of thing, because we're like such weird animals that we love that human connection so much. And so, like, maybe something like that also happens with AI. I don't know, like, because AI will flood everything. It will flood like social media content, movie screens, like entertainment things, as you said, like everything will be flooded by AI. I mean, if you think about it, we already have animation movies since a very long time. There's still human, like a human is writing the script and doing the animation movie, but there's no like we identify with an animated character that has no real connection to reality. It's just a guy thought about a character, which is kind of the thing with AI too. You know, like someone can make an AI movie that he thinks about the script and he thinks a little bit about like the storyline, and like he gives his human touch to like what AI kind of came up with, but all of it is kind of made up. And animation movies are huge. Like people love animation movies, from kids, but also adults love animation movies. And so I think we will enter that world. The question is just like, what is there a premium of personal connection? You know, like, is there a premium of like meeting someone face to face? Like, I just was at Prague, Bitcoin Prague, and there were more people this year in the bear market than last year in a kind of bull market, which I'm like, oh, that's interesting. Like, how the heck did they pull it off? First of all, and second of all, it's like people really like being there, and there is nothing of value that you couldn't just get otherwise. After the fact, you can listen to all the Saylor talks, Jack Mallers talks, Jeff Poof talks online. Most of them already published just a few days or a few weeks afterwards. The only thing you're getting to sit in row with a bunch of other people and look at them and like network and do all that stuff. Why are people doing that? I don't get it. Like, I do it, I love it, and I'm addicted to it, and I will keep doing it. But if you think about it logically, there's no value there except of like you can shake someone's hands. And it's like, yeah, like why are people so obsessed with human connection?
I think we're tribal by nature. You know, I think like it's kind of built into our evolutionary DNA that like, you know, there was a point where kind of you were in this kind of hunter-gatherer kind of existence where basically if you got cast out from the tribe, you would die. Like it was almost like there was no specializational labor to the degree that like one person couldn't really probably sustain their own existence for any like really long sustained period of time. It kind of required the village or the tribe to kind of stay alive. So I think we kind of crave that interpersonal human connection to a certain degree. And some more than others. I mean, I know like, dude, I don't know. Like, I mean, it's the certain personality types that gravitate toward Bitcoin. I think a lot of us can probably just shut into a room with a book or YouTube for probably an uncomfortably long time, actually, before they maybe crave that human interaction. But, yeah, I mean, I think like we're still going to want, like, I mean, you still want to be alive. Like, I mean, I think we work to live. We don't necessarily live to work. So, like, just because you take somebody's job away, I think it's harder to find purpose and identity, because I think a lot of people kind of tie those things into what they do for a living or what they accomplish with their time. But they still want to just be alive and experience the human experience. So I think that there will always kind of be that. I mean, we might go into some kind of Wall-E world where we're all just shut in on like a rascal watching screens, but I think you even see it now. I mean, it's really kind of largely personality driven. It's easy to fall into that kind of dopamine trap of like, I think that's when I walk into a casino and I see people just like playing a slot machine for hours. They don't even understand how the game works. They're just like waiting for like the bells to go off and like, you know, the the bonus games to show up. But like if you asked them what was happening, they wouldn't be able to explain the game to you. It's just kind of this like very cheap, just kind of like dopamine drip. But then there's also people that, you know, I would imagine if you unlocked a whole bunch of free time for a smattering of people, there would be some people that would just watch, you know, garbage Netflix shows from sun up to sundown. And then there'd also be people that would be like Thomas Jefferson and would be trying to build a clock in their house, or trying to make wine in their free time, or trying to, you know, learn the stars or think about new philosophical ideas. I think all that whole spectrum would exist just based on personality differences. But the cool thing about AI is what I've noticed in my world too, is it's an unlock where, you know, I'm not an animator. I don't really have time to create, but like, I've been kind of using these like prompting tools and like animating photos with Grok and doing different things. And it's like, it's kind of cool that you can have an idea and bring it to life so quickly. So you don't have to be like, hey, I have this idea, but I don't have, I can't quit my job and work on it for the next 6 months to have it come into existence. But I think people are like phenomenal kind of idea generators. And like now we have more of a capability than ever before to act on that idea kind of in real time. And it doesn't require a large sacrifice that makes most ideas just kind of fall by the wayside. I mean, like everyone's got that uncle that has some crazy invention idea that never came to fruition because it just required too much effort. But if you can leverage these tools and suddenly, you can like imagine a JK Rowling, but now in the AI world, like how much more content would she have been able to create using the tools we have now? And like she would have never necessarily had to sell Harry Potter to a movie production team. Maybe she could have made the movies herself and the exact vision that she wanted them to be made. And there's probably a ton of creators out there that before now never had access to the resources that would bring their ideas into reality. And I think so you will see a flood of kind of new creative outlet, I think, happen. Now, how much of that actually has value and how much of it is just slop, as we say, like, I mean, that's TBD, but it's, there are people I think that have never had access to creative outlets that now do. And that's probably going to be cool. That's probably going to be, you don't know exactly what comes out of that. It's very like unknown, but if you unlock that amount of kind of human creativity, we're probably going to see some pretty cool things come out of that we're just not even thinking about.
It's so exciting, and I just realized we almost talked for 2 hours now. But yeah, it's so interesting to think about the AI impact, the world that we're entering. I always come back to this phrasing of what a time to be alive, and how lucky and grateful we have to be in, like, to live in that small area of time where we see Bitcoin and AI at the same time kind of starting off, and just witnessing from the first prompt you did on ChatGPT and the first one to now like doing all that crazy shit, and like how much better it got in like literally 2-3 years. It's kind of amazing to think about it. We have an end routine in the podcast, as you might remember from the last time, where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you the question, have you considered selling some of your Bitcoin to buy an upcoming AI stock IPO?
No, that was actually easy. I've had this thought before. I think I posted this on my X account recently. I actually think the best investment in an AI world might be Bitcoin. I'm obviously biased, but like the reason I say that is it's very difficult, I think, to look at this AI landscape. It's moving so fast, and the barriers to entry are becoming so low that I think it's going to be very, very difficult to pick winners and losers, like pick which horse is going to end up winning this race. I mean, there's obviously some front runners that, there's kind of a CapEx hurdle that you have to get over to maybe be like SpaceX obviously has built a pretty good moat, right? But I think the easiest way to capitalize on AI just improving the human productivity of the human race is to invest in the money that all of that productivity gets captured by a finitely denominated asset. So I actually think, in a way, Bitcoin is the best AI investment, not because it's AI itself, but because it will perfectly capture all of the productivity gains that AI will unlock in all verticals. So instead of having to pick the right company, you just pick the money that accrues value as productivity increases. And that way, it's almost as if Bitcoin becomes the index fund for human productivity or human ingenuity, or like the S&P 500 of AI companies. Like instead of owning one, by owning Bitcoin, you own all of them, because any single one of them that increases human productivity, and to whatever degree that becomes possible, all of that new production and all of that new efficiency gain will be still finitely priced in 21 million Bitcoin coins. So as long as Bitcoin still exists, stays Lindy, doesn't go away, it's going to reprice all the new productivity. So instead of trying to pick the company that wins, that will outrun the inflation on the fiat, Ponzi side, you just pick the money that will actually denominate all of the efficiency gains. And then whichever company wins, you still win. If they all win, you still win. You don't have to try to say, well, is Gemini better than Perplexity, better than ChatGPT, better than Grok, better than XAI? You don't have to pick who's going to win the race, because no matter who wins the race, productivity increases. That gets denominated in a fixed supply asset, and you win no matter who the winner is. So, yeah, that's what I would say to that. I wouldn't sell my Bitcoin to invest into any AI company, because I think by holding Bitcoin, I invest in all AI companies.
I love that take, because it's one that if you heard that now for the first time, it's kind of really hard to wrap your head around the idea of Bitcoin being an AI play kind of a thing. But the more you think about it, the more you realize this is actually the best play, especially if you think about that absurd high valuations that like the SpaceX has, and like I'm sure the Anthropic and OpenAI trade will have. They will have a very, very high valuations. And then you look at Bitcoin, where it sits compared to the 200-week moving average, to the power law, whatever you kind of like prefer to look at, to see if Bitcoin is a little bit higher, a little bit lower, like Fear and Greed Index. There's like a bunch of those things that you can look at. And you're like, okay, I can buy this asset that is bleeding 50% down and is screaming value right now, for me at least. Or I can buy this like absurdly high valuation IPOs that capture maybe something if they are productive, or this other thing that captures everything. So really, really cool that we ended on that note. Before I let you go, where can people find you, ask you questions, and reach out to you?
Yeah, man, I'm available on X or Twitter at TCB Coin. My podcast is available on Spotify, everywhere else. I focus on the Bitcoin newcomer, because I think that's kind of what we kind of, sometimes the longer we're all around Bitcoin, we leave that kind of entry level conversation further and further in the rearview mirror. And I just thought that was the niche that maybe people weren't really hitting, was, they come to Bitcoin content now, and we are 1,000 miles into the stratosphere talking about AI and agentic economies, and like quantum computing and all this different. And they need to come in and get met where they're at, and they can't really jump on the train when it's already moving that fast. So if you're new to Bitcoin, if you're curious about Bitcoin, if you know anybody in your life that is curious or new to Bitcoin and would like to come on a podcast, put themselves in the hot seat, I guarantee you it's not as intimidating as it sounds. It's just like if we met at a barbecue and like had a little Bitcoin conversation, but then you could get your direct questions answered. And even if you don't want to put yourself in the hot seat, I guarantee I've done enough of these now that whatever new to Bitcoin question you have, almost without exception, has probably been addressed at some point in the last 100 and something episodes I've done. So find it there, send all the Bitcoin newcomers that way, and we can build this community out. Grassroots, that's the goal.
Thank you so much, Mike, for being on the podcast. And also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back. This content is for educational and entertainment purposes only and does not constitute financial advice.